How does settlement work for non-standardized options? Have you ever wondered how settlement works for non-standardized options? This topic can seem tricky, but understanding it is key to navigating the world of options trading. Non-standardized options are different from the typical options you might be familiar with. They often come into play after significant corporate events like mergers or stock splits. When these events occur, the terms of the options contracts need to be adjusted. This is where the Options Clearing Corporation plays a vital role. They work with exchanges to determine how to modify the contracts to keep things fair for both option holders and sellers. Unlike standardized options, which usually representing the right to buy or sell 100 shares of a single stock, non-standard options can requiring a different number of shares, shares from multiple companies, or even a mix of shares and cash. For example, if a company merges and its shareholders receive shares of the new company along with some cash, the non-standard option contract will reflect this change. When the option is exercised, the holder will receive the new shares and the cash amount specified in the contract. Settlement happens when the option is either exercised or assigned. The clearing organization ensures that the option holder gets the adjusted deliverables. This could mean receiving a combination of shares and cash instead of just 100 shares of a single stock. Settlement can be physical, meaning actual shares and cash are delivered, or it can be cash settled, depending on what the contract states. Because each non-standard option contract is unique, the settlement terms can vary widely. This makes these contracts generally more complex and riskier than standard options. Investors need to be aware of the specific terms that have been adjusted before they trade or exercise these options. Understanding these details can help you make informed decisions in the options market. So, the next time you come across non-standardized options, remember how settlement works and the role of the Options Clearing Corporation in this process.